Hey guys, this is Ryan from On Property, your daily dose of property education and inspiration. And today I've got with me Lloyd Edge, who's from ozpropertypowwow.com. And just wanted to welcome you today, Lloyd, and thank you for coming on.
Hi Ryan, how are you going? Good to meet you.
Very good. Okay, so today we're going to be learning a bit about you and learning a bit about your story and what we can learn from you and your experience. So do you want to, I don't actually know a lot about you, which is, I think, a good place to be in because it means the audience will get to learn as I learn. So do you want to tell us a bit about yourself to get started?
Sure. Well, I guess starting from where I began was when I started investing about 10 years ago, when I bought my first property. Going forward to now, Oz Property Power is a blog that I have that I've started about 6 months ago, which it started on the basis of a lot of people asking me, a lot of my friends asking me for some help and advice on investing based on some of the experiences and success that I've had. And I'm looking to develop that blog into a business a little bit later on, because I'm doing my diploma in real estate at the moment. So that's in a nutshell what that blog's about at the moment. So, as we talk, I can fill you in a little bit about my investing journey and things.
Yeah, totally. Well, so you said you started about 10 years ago, did you? What was, talk us through your first property? Because one of the things I find with people is that they say the hardest thing is their first property, or the hardest thing is saving the deposit for that first property. How did you, I don't know if you can remember back then, but how did you get to the point where you were able to buy? And what was your first property?
Yeah, that's quite clear in my head, really. But I spent quite a few years saving up before I actually got into that, because property wasn't really a real passion of mine when I first, when I was really young and everything. So I was just basically saving my money, and then eventually got to the point. I think I was in my late 20s when I decided I really should start getting into some property. But investing wasn't actually top of my priority. I was actually looking for somewhere to live, so I thought I'd buy a home, a house to live in. So the first place I bought was actually a principal place of residence, and it wasn't until a few years after that I started to actually invest in more property. But the first place, it's turned out to be, I've still got it, it's turned out to be a good investment, but that's kind of happened by accident or by good luck in a sense, because of where I wanted to live. It was in Sydney, it was near the water, it was near the train station, it was near the shops and everything. So just by mere fact of buying where I wanted to live, turned out to be a good investment later on when I went to lease that place out and to use that equity to build my portfolio further. But because I know a lot of people sort of say that they, sometimes their biggest mistake is their first property because they do it uneducated. So mine was uneducated as well, but I guess it happened by luck that I bought in a nice place that I wanted to live, and that's turned out to be a place that's been a pretty good investment for me as well.
But I think a lot of people do that is they go into the property market to buy their own home as the first property. And to me, that makes a lot of sense. There's a lot of benefits to owning your own home and having that security and stuff like that. So you bought your first property as your home. You then decided a few years ago you wanted to start investing in property. Is that when the passion began, or did you buy a couple and then started making money and you thought, this is pretty awesome?
I think the passion probably began after the second property. So the first place, it was an apartment. The second place I bought, because I wanted to actually live in somewhere bigger. So I decided I would buy a larger house and move out into that and use my first apartment as an investment, which it ended up getting leased out, before I even moved out of it. So that worked out quite well and all that, and that made me feel pretty happy with that kind of stuff. And I moved into my next property that I just bought, and then the passion just started to just come then, and I started to read a lot of property magazines, do a lot of searching on the internet, and that property the whole passion of that started to take off from there. And that was about 5 or 6 years ago. So I've sort of had that passion that's been building ever since then.
So the second property was to buy your own house as well. So that was one. You were moving from the apartment into the house.
That's right.
So yes. Has that been your strategy along? You just kind of buy a new house and move into it and then turn your old house into an investment, or was it just the first couple or two?
It's not my strategy now, because I'm quite a steady investor now, but that's just the way I started out. Because as I said, when I first started out, I wasn't really investing wasn't my initial focus. So the first place I bought was to live in, and then when I felt that was a bit small, I wanted to live in a bigger house, I went and bought a bigger house, and then just instead of selling the first property, I just kept it as an investment.
Yeah.
And so, but sort of after that, the second house I bought, I actually ended up leasing that out and using that as an investment as well. But basically, because when I met my wife, we ended up buying a place together, sort of back closer to the city, a bit more of an expensive house. So I ended up picking that second property as well. But generally, that's not my strategy now, because I'm sort of really into investing and investing around the country now. So that was just the way I started out.
Okay, so talk us through your strategy now. What are you using now as your strategy to invest?
Okay, so I'm investing in both the Sydney and Brisbane markets, especially Brisbane at the moment, because I feel that there's a lot of potential for growth there at the moment, and price points were probably about 30 to 40% lower entry point than Sydney.
Yeah.
And I've also bought in a couple of regional areas, but I've got a mixture of cash flow and capital growth type properties. So in the regional areas, I'm looking at doing the cash flow properties there and balancing them in the with blue chip properties with capital growth. The strategies, I guess, I'm getting really into the dual income type stuff at the moment. I just finished doing a duplex last year, and I'm actually now looking for another dual income property in Brisbane, because I'm finding that the dual income ones are that positive cash flow, if you can getting yields of over 7%.
Yeah,
what I'm really looking for there. But I guess in general with my strategies, buy either building new or buying new, because that's also got good depreciation benefits on it as well. Buying in New South Wales means you get a $5,000 government rebate for the stamp duty. So that's been good there. It's not quite the same in Queensland, so I mix it up between the different states to help with the cash flow management.
Yeah. So is that a boost? Is that a boost from the New South Wales government? Is that what you mean?
Yes.
Yeah. For buying new property, is that correct?
Yes, that's right. Yeah.
Yeah. So you're buying a mixture of positive cash flow properties and negative geared properties in capital cities in order to get the capital gains from that. Is that correct?
That's correct. Yes. I do keep. I like to have a minimum. I don't like to go too negatively geared, because I always like to have quite strong cash flow, because if it's too negatively geared, then you sort of hit a brick wall and you can't keep moving forward. So even I still strive for getting over about 5.2, 5.5% returns, even on the ones in the city. So I look pretty carefully to try to find ones that still have pretty good cash flows within the city. But with the more regional areas, I'll be looking at from upwards of 6%. Dual income probably over 7%. It's getting a little bit more difficult these days, because as property prices are rising, the yields are compressing around the country as well. So that makes it a little bit more challenging, but the deals are still out there to be found.
So why do you avoid negative gearing in your situation? You said that it kind of stops you from moving forward. Are there any other reasons that you or other people should avoid negative gearing? Or
negative gearing doesn't really make sense to me, because you're losing money. And I think with my goal and with my wife's goals with property, to have it replace your income and replace your job at some stage down the future. If you're buying over negatively geared properties, then you're very reliant on your work, your income to be able to pay for the shortfall that comes out of with those properties. If you're buying positively cash flow properties, then I guess you have a better chance of getting closer to retirement earlier. And I guess, if something happens to your job, then hopefully those properties can still pay for themselves, because they're positively cash flow. Where they're negatively cash flow, you might be in a situation where you might need to sell down.
Yeah, I like that. I like that about positive cash flow properties, is that if you get in a sticky situation and you lose your job or you lose your income or something like that, the positive cash flow properties actually prop you up for a time, because they generate you income. Whereas negative geared properties, they kind of tear you down, because they're still requiring income from you and you don't have anything. So often we plan for things in best case scenario and we think, well, I'm earning this much, maybe my income will go up over the years, but we never really plan for worst case scenario. And I like that about positive cash flow property, is that it does that.
So you always need to try to mitigate the risk and plan for worst case scenarios as well.
Yeah. So what is the long-term goal for you? Is it to replace your income and to retire early and play golf or something? What is the end goal for you?
Yeah, not really in terms of just play golf and retire early, but I think part of the strategy is obviously I mean we don't have kids yet, but when we end up having kids and we get out to just sort of one income, hopefully my wife will be able to stay at home and look after the kids, or I can stay at home and look after the kids depending on what we decide, but be able to sort of live on one income and not both of us having to work. And then be able to put our kids through private schools and stuff without stressing about, where that money's going to come from and that kind of thing. So I guess setting yourself up for the future is what we're looking at. In terms of working, because I'm a teacher at the moment, but I'll be looking at cutting down on that a little bit in the future and developing the Oz Property Power label. So because property's certainly my passion, and I'm doing a diploma in real estate at the moment to head towards being a buyer's agent so I can assist other people in purchasing.
Awesome. Yeah. So tell us a bit about your learning journey and some of the biggest things that you learnt along the way. Like if you were starting out again or you're talking to people who were looking for advice, what do you find that are the biggest things that you learned that you can share with others?
I think probably one of the biggest things is get really, really well educated before you buy your first property, and have a strategy and have a plan in place. I think the very first property is very important to set yourself up for the future. I think, as I said, I was a bit lucky with my first property, but I think it's an apartment. If I had bought a house with land, it might have appreciated a bit more, and I might have had a bit more equity in it by now to do more with it than what I did. So I would be recommending people to think carefully about the type of investment they start off with. I think there's a place for like apartments and houses in people's portfolio. Some people say only buy houses and whatever. You can probably buy both, but I think you need to consider carefully what you should do for that first investment and how much equity that's going to get you in the future, because you want to be able to move forward. So you don't want to sort of sit on an investment and have nothing happening with it for a few years, because you want to. The goal should be to to be able to take some equity out to move forward to another purchase. Yeah. And I think people definitely need to have a goal in mind. They want to know what they want to do, because I think people, if they just go out and just buy a property just randomly, they've got no goal. They don't know how they're going to get there. If you know what you want to do and you've got some sort of goal, that goal might be, in 10 years time, they want to have a passive income of 100,000 or something like that. Then they can set themselves a goal of buying, one property a year for 10 years, for example. And they can also then work on what sort of properties they need to buy. Whether they buy, blue chip properties, or they might buy a mixture of blue chip and cash flow properties. Or even, a strategy like, you buy 15 properties, and after 10 years you pay half of them off, and then you own the other half, and that gives you the your passive income. But having those sort of goals up front, rather than just going out and randomly buying properties.
Yeah. So it sounds like with you, your strategy kind of developed over time. Like you started with an apartment that was your own place, then a house that was your own place, and you become a more savvy investor as time has gone on. Well, I think as you said, I totally agree with you that people actually need to know where they want to end up before they start investing, because if you don't know where you want to end up, then you could basically buy any property in Australia because you don't know what you want. Do you have any advice around actually choosing your investment strategy? I know it's hard for people who aren't already in the market to say, well, this is how I want to invest. Is there a way that people can find out about strategies and choose the one that's best for them? Do you have any advice around that?
I think people need to do a lot of reading and just get really familiar with the property markets to start with, and attend probably seminars and things. But don't go to seminars and buy things because sometimes people will try to sell things at seminars. But just get there and just get familiar with the different types of products on offer, and then I think just really look at what you want out of the property, like I said. So if your goal is to buy 3 properties in a space of 5 years, then you should look at because property is all about the numbers. So you need to look at where you think you'll get the growth in which markets in that time. Whether you'll be get a house, if you get a house and land package or something like that, whether that's going to get more equity in like an outer suburb, or whether you're better buying a blue chip in a city. And you need to.
Is there any particular research you do to work out what areas are likely to have capital growth?
So the way I do my research is to really look at what's driving the population growth in a certain area. Look at new infrastructure, new hospitals, new roads that are in place.
How do you find out about that sort of stuff? Sorry to cut you off there, but how can people find out about infrastructure? That's a question I get asked a lot. New roads, new government projects, new hospitals. How do people find out about that stuff?
One of the best things to check is actually council. You can actually contact council and check their websites, and even ask members of the council, even town planners. You can ask them questions. I built a duplex in Armidale last year, and I was in constant contact with the council, asking them all sorts of questions about what's planned for the area. Even if you're buying in an estate, new housing estate, just checking on if there's vacant land next to it, what's planned for it, is there anything planned for it, is there any, major subdivisions, just everything.
So did you literally call the council and talk to people at the council and just say, I need to talk to someone about this?
Yeah, I did. Yeah, I called them and I emailed them. Another good sign of places to invest is if places like Bunnings or Woolworths are opening up new stores in those areas, because that means that kind of saves us as investors from having to do too much research, because that's all the research has been done by those big companies, and they've spent millions of dollars on research, and Bunnings is not going to open up a store somewhere unless they've done research that they think is going to be a good area for them to invest in. So I think us as being mortal investors can follow in their footsteps and their good areas.
Well, yeah, that's a good idea. Actually, I like that idea, because I guess Woolworths and Bunnings and everything, they spend so much on space and so much creating their stores. They would be investing in areas that they would predict would grow in the future, and so that would be a good spot for, I guess, their store. And so it's a good idea to, I guess, tap onto the back of that and their research, and it's a good indicator of.
I think even places with a lot of education, if there's a lot of universities and private schools, even places like Toowoomba where they've just built a new airport, that's predicted to boost the population, boost employment, and predict to be good for the property market. So if you're looking for a regional area that might be a little bit cheaper to buy into than a capital city, that could be a good area to be looking at. But again, just sort of do due diligence. Check all the council websites, and then you need to obviously then look at the actual micro markets within the city, because then once you decide if you're going to buy in that area, you need to decide which suburb you're going to buy in, and then really narrow it down further.
So how do you narrow down, once you choose, okay, I want to invest in Brisbane or wherever, Toowoomba or whatever it is, how do you then narrow it down to those micro areas that you talked about?
So, again, I'd be then looking at what's considered to be the good areas, the bad areas. And one of the really good ways of doing that is actually ringing up local real estate agents and just pretending to be a buyer, an interested buyer. And most of them will be quite helpful. And even if you ring up and just say, you're looking at renting in the area, can you tell me if should I rent this house in this area or in that area, if they've got a couple of places for rent or whatever, and that can give you a bit of feedback on those sort of areas. And I think there's you can find just about anything on the internet. You'll always find something on the internet about any suburb really, and there's also property forums that you can go onto, Somersoft and places like that, and there's always people that are making comments on any suburb. So there's always those kind of information to be found on, and then I guess it comes down to if you're going to buy a property, are you buying into a suburb of infill area, or is there going to be a lot of new development there? Are you buying where there's a whole lot of older houses? Or are you, is your house going to be, it's going to have a chance for capital growth, depending on what else is on the market. So there's a lot of those things to balance up.
A lot of factors to take into account. What about when looking at your property and you decide on an area you want to invest in? Do you then fly to that area to have a look at the property before you buy it, or do you buy sight unseen?
So I have bought sight unseen before, but I don't really recommend that.
Why not?
The, yeah, no reason well, I wouldn't say no reason, but I think one property that I've bought that's not doing particularly well is actually a place I bought in Toowoomba. And I think that if I'd gone to see, I don't know whether it would make much difference had I gone to see that or not. But I probably think that's probably one of my more underperforming properties in terms of the growth it's getting and also the rental yields that it's getting compared to what it was proposed to get. But I think I used to think it didn't really matter if you went and saw the property because it's all about the numbers and stuff. But I actually think there's a little bit more to it than that, because if you actually go and see the property, you can actually see what else is around the area. If there's any really really bad housing estates, any really bad streets and things, because those are the type of areas that might put off tenants wanting to live there, and it might put off that those sort of things can affect growth as well. And you can read things. You get a property report and it might say 3Ks from the hospital or near the train station, but unless you actually go there, I mean, you look around on the map, but if you go there and then you actually see how far it actually is to the hospital, and you actually get a really hands-on approach to see whether that property is actually stacks up to what it looked like in the property investment report.
Yeah, because I guess it would be hard to get a feel for the streets from like Google Earth or Google Street View and stuff like that. When you're actually in the area, you can feel if it's Darrow and it's a bit low economic, you can kind of feel that when you're in an area. And so
yeah, I think that's something I've just sort of learned, as my journey's gone on. So I think my philosophy there's changed a little bit as I've developed, and I think that I'll going and actually seeing the area that I want to buy property is certainly something that I do these days.
Yeah, and you said you like to buy new build properties versus existing properties. Is that just for depreciation, or are there other benefits?
With new builds, what I like to do with a new build is you can get instant equity. So because basically you buy some land and build a house on it, the idea is you should be able to build a house for less than what the replacement value is, so less than what the existing houses in the area is, and therefore there should be some equity in the deal as soon as you've finished that build, and then you can get it refinanced, get it revalued, hopefully get some equity, get it refinanced, take the equity, go out and do your next deal. And that way I'm finding is a good way to move along and buy properties fairly quickly without having to wait for growth. Because if you buy in an area, although you can buy an area that they say is going to have growth, but there's no guarantee that it could still be flat.
There's never any guarantee that an area is going to grow. No matter what predictors show that it's going to grow, it doesn't necessarily mean it will.
I think if you build in an area and try to build under market value and factor in the fact that you'll get some instant equity just through the build, then even if the market hasn't grown, you'll have still achieved some growth. So
do you buy the land yourself and then organise an external builder, or are you buying like a house and land package?
I've done both, but generally, last year I did a duplex deal. So I bought the land and then got the DA through, and then found a builder to build on that. Or you can get a house and land through an investment company or something. I find that sometimes those ones are a little bit too they're all a little bit too the same. And if you're buying like in a housing estate, a lot of those houses are all sort of built the same as each other. So I try to stay away from those unless they're sort of different. We've got like some kind of difference. What I like with the reason I like the dual income, the duplex type stuff, is because you build a duplex and it's just one house, but you can get it strata titled into so it basically becomes two properties, and that actually creates an equity from the get go as well. So and you can do that just about in any market.
So is that what you did with your duplex? You built it and then strata titled it, or is that a plan for the future?
Well, it's getting strata titled at the moment.
Yeah.
In fact, we're expecting that to come through any day at the moment because the build got finished at the end of last year.
Mm-hmm.
It's now got tenants in it. So because of the slow government departments, sometimes they take a bit of a while to come through.
Yeah.
So it's strata title of that is being done at the moment.
And then the plan is are you going to keep them or are you going to sell them or sell one and keep another?
Probably in a couple of years, I'll probably sell one and still keep one. But at this stage, it'd be with the purpose of taking out equity out of one of them, I guess, and using that as a deposit for the next property.
Okay, so that's smart. So you're getting it strata titled, which adds value, which you can then get refinance. So you've got equity to go again.
That's it. That's the whole idea of doing it.
Yeah. And then you've got the flexibility of whether you can sell or not, but you got that extra value and you can refinance it out.
I was going to say that's the best thing about duplexes is that there's so many options with them. You can keep one, sell one, keep both, sell both, and it's dual income. So, and the best thing about that also is that if one got vacant, at least the other ones should still have tenants in it at that time.
Yeah.
But yeah, it's the whole instant equity thing is really good with that. And also, when you do something like that, you can do it in almost any market, any decent market, where you don't have to just do it in a capital city because it's actually really expensive to buy some land and build a duplex in the middle of a capital city somewhere. Yeah. But do it in a regional area where the growth generally might be a bit slower than a city, but you've got this instant equity that you're building, so you can still make that even without the growth in the market. So so you're sort of just creating your own capital growth in a sense.
Yeah, well, I really like that idea. That's a good idea of a way to create capital growth, but then still give you the flexibility to do different things with it down the track. Sounds like a good strategy. Are you going to replicate that in the future, or I guess you'll see how it goes first, won't you?
Well, I guess I'll be getting it. I'm in discussion with my broker at the moment in terms of as soon as we get that strata title come through, we're going to get it revalued. But I definitely want to do a duplex again. But a little bit further down the track, I want to do some bigger things than that too. So maybe a triplex and a small block of apartments or townhouses a little bit further down the track. So it's sort of a matter of starting small and just building up, and as you get the capital to be able to do it, just keep moving along, doing bigger stuff, I guess.
Yeah, awesome. Well, I've really appreciated your time today. One more question before I let you go is, does it stop? When does it stop? Or are you just so passionate about it that you don't need it to stop?
Definitely at the moment I don't need it to stop. Yeah, because like I said, I've got plans to do bigger developments. So I'd like to do some apartments and some townhouses. I think with being my goal to become a buyer's agent to help people is something I'm really passionate about because, I'm a teacher and stuff. So we really love to be able to help people get into property and help educate them from the start so that they're not sort of making any mistakes or just doing it by ear. Yeah. So from that point of view, just see where it takes me. But it's all a big passion at the moment. So see what happens.
Yeah, awesome. Okay, well, thank you so much for your time. Do you want to tell people about your website and what they can find there so they can go check it out?
Yeah, it's www.ozpropertypowerhour.com.au. And it's just got blogs, information on the strategies I use. It's got information, up-to-date information on what's happening in the property markets. And I talk about how to get equity out of duplexes, house to land packages. Talk about the benefits or the pros and cons of buying off the plan. There's a lot of stuff there. A lot of it's aimed at first home buyers as well. So there's a section there for first home buyers. Talks about different types of home loan rates. Talks about the benefits of using mortgage brokers. So plenty of information there. It's all free information. It's just my passion. I just put blogs out there, and people can subscribe so that they can get the blogs to their inbox if they'd like to get regular blogs.
Yeah, awesome. Well, it sounds right up the alley of my audience. And if there's one thing I know about this industry, there's not enough people out there teaching people what to do and what to do right. So it's good to have you out there teaching people, and I wish you all the best. Thanks so much. I'll talk to you soon.
Thanks so much, Ryan. Cheers.